Hey everyone, welcome to Property Finance with Lee. I'm a mortgage broker who talks all things property financing and investing. Hit the subscribe button, turn on notifications to keep up with my latest content. The end of the year is so close. Most of us are getting through our work, trying to wrap up the year so we can have a couple of weeks off and enjoy some time with our families over the holidays. I don't know about you guys, but I feel like the last year blew by so quickly. I honestly can't believe Christmas is just a couple of weeks away. Over the year, there was a lot of talk in the media about house affordability. I've talked about it quite a bit on this channel as well. But I sometimes wonder if it's constructive. I suppose I stress the point to light a fire under you guys to put a budget in place and to start your home ownership journey. But today I'm going to give you an achievable goal to take into next year, no matter what your level of income is. I know some of you, no doubt, are feeling deflated, thinking you will be stuck in a rental forever. Guys, there's no need to feel like this. Let's jump in. What I'm going to illustrate today will work with three budget scenarios. Someone earning 50k a year, someone earning 100k a year, and a couple earning 75k each. Between these examples, there should be a base level for everyone to start from. Before we jump into each individual scenario, we're going to work with the assumption that we're not purchasing a forever home. This won't be where you settle down with your partner, it may not even be in the same state. We're looking to purchase something at the start of the following year, after we have saved a sufficient deposit to purchase something, anything that can get us into the market. We are going to work with the understanding that you can save 50% of your wages, and please don't tell me you can't do this. I did, I have clients that have, and so can you. It will be uncomfortable, sacrificing always is, but with good budgeting, you can do it. Take a close look at your spending patterns and find areas where you can eliminate or reduce expenses. When I made the decision to purchase my first property, I was a heavy smoker. I smoked over a packet of cigarettes a day. I used to get bronchitis every year. It was horrible. I didn't care. It was beyond an addiction for me. I genuinely loved it. What made me quit was the fact that I worked out that I was spending around 10k per year on this stupidity, and that was 10k I needed for my deposit. I stopped smoking cold turkey, not for health reasons, but because it was counterintuitive to what I was trying to accomplish. As soon as I achieved the goal of purchasing my place, just to point out how much I love smoking, I stupidly started smoking again for many years. I've quit again now. It's been about 2.5 years. I make this point because people say they can't cut costs. But I find what they're really saying is they don't want to go without. It's hard giving up coffees from a cafe every day, smoking, going out every weekend, or buying a crappy prepaid phone instead of the latest iPhone. You'll give up a lot, but at the end of the day, it's well worth it. The property market, interest rates, and demand are things you can't control. Your personal budgeting is. If you want more tips on how to save your deposit, follow the link above. I have a full video on it. Now, let's start with our 50k example. You've saved 50% of your wage. What can you do with it? What can you do with 25k? I don't like hypotheticals. I'm going to use the recent purchase of an apartment a client made as an example. My client utilized the services of a buyer's agent to source a high-yielding property. The buyer's agent found an apartment which they secured for 180k. It's over 50 meters squared, which means he can get it financed with most lenders. It's also an inner city suburb. It's a great investment. There's a yield of 11% on it. With a 50k income, something you can earn working 40 hours a week at 25 bucks an hour, without existing debts like car finance or a credit card, and assuming at this earning level, you're renting a room at $250 per week with $1,500 in living expenses per month, which most banks will judge you at anyway, you can service for a loan of up to $200,000 with these figures. So you can buy a property like the one my client purchased, no problem. But let's imagine you decide you don't want to purchase it as an investment. You are purchasing it to live in as you are room sharing now anyway. You can still service for it. If you save half your earnings from your 50k wage, around this time next year, you could be signing a property contract for your very first property. So, we had 25k in savings. How was it used? Well, 4.7k went to stamp duty and the remaining 20.3k was forwarded as a deposit. We capitalized the LMI, meaning we added it to the cost of the loan, leaving a loan balance of roughly 162,000. On that amount, at an interest rate of 6.4%, our repayments are $1,013 per month. That's $253 per week. Basically what you were paying to rent a room, you now pay for a place you can call your own. I feel this is achievable. What do you guys think? Now, let's work with the supposed average wage in Australia of 100k. What can you do on this income? We can see straight off the bat that if you're purchasing for the purposes of moving into the place, you can comfortably borrow around 480k, the major bank. With a 50k deposit you saved over the year, you can purchase a small one bedder somewhere for around 380k. Even in Sydney. Have a look at this. I quickly chucked in 375k as a max purchase price and one bedroom. We can see there's quite a few for sale. Just make sure it's over 50 meters squared, as most lenders won't finance properties below this size. Now, if you're looking at purchasing for investment purposes, I'll set the rental amount paid to $300 per week, as you need to live somewhere. I'm assuming you're sharing a place. You have borrowing capacity of up to 435k for a major bank, but we will look at a property purchase price of 350k as we're trying to aim for around 90% borrowing. The rental return is set at $400 per week with $400 a month set aside for expenses. We are looking at a rental yield of around 6%, which is more than achievable, especially if you utilize the services of a buyer's agent. From your 50k deposit, you need to pay stamp duty of 13k. That leaves you with 37k you can contribute to the loan, and there's an LMI cost of around 7k you can capitalize. So, I've shown you a scenario of someone earning a very minimal amount of 50k per year being able to purchase after a year of saving, and also what's possible after saving for a year of earning the average income in Australia of 100k per year. My last scenario is of a couple who both earn around 75k each. I'm assuming you have no existing debts like car finance or credit card. Your living expenses are judged by the banks at around $4,000 per month. You may be wondering why I keep bringing the living expense figure up. When you're trying to save your deposit, your living expenses should be lower than this. But once you have your deposit, keeping yourself around the HEM level, which is a standard measure banks use for your living expenses, will maximize the amount you can borrow. Below this level won't really matter for your borrowing capacity. Okay guys, look at this. At 75k each, your shared borrowing capacity sits at around 650k. You want to contribute a 10% deposit, so let's work with a purchase price of around 600,000. By saving half of everything you earn, you manage to save up a 75k deposit. In New South Wales, stamp duty cost is zero thanks to the first home buyer stamp duty concession. So from your 75k deposit, if we take out conveyancing cost of 1,500 as well as the LMI cost of 8,544, there's about 65k remaining, or 10% of the loan you can contribute as a deposit. Again, this is more than achievable with sacrifice and discipline to your budget. Guys, I hope these examples have shown you that although we're in a very difficult market at the moment, there's still a path to home ownership. Like I said earlier, what you find will not be your forever home. It may not even be in your own state, but it's something you can call your own and will keep in pace with inflation. You need to start somewhere. Don't be discouraged. Use what you can as a stepping stone to get yourself into the property you want one day. Feel free to contact me from the details below. Let's put a plan in place and make it happen. That's it for today, guys. If you have your deposit and found a property, it's a good idea to get a property report that outlines the sales and rental history of the place you're looking at. Follow the link in the description below, provide us with the address, and we'll email it to you. Thanks for joining me today. Catch you next time.